Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in corporate filings. And if you thought this McCormick filing was going to be all about ketchup packets and spice racks, well, hold on to your hats because we've got some serious finance acrobatics to decode. Alright, let's dive into McCormick & Company's latest annual report. We're talking about a company that is a titan in the flavor world, but on the financial side, how are they holding up? In 2025, sales ticked up a bit, just under 2% to $6.8 billion. That might sound modest, but it is a steady climb, not a stumble. Digging into those sales numbers, it is interesting to see what is driving growth, volume, and product mix, which means selling more of their stuff and maybe shifting towards higher margin items added about 1.2% to sales. Pricing actions, meaning they increased their prices, contributed another 0.7%. So they're not just selling more, they're also getting paid more for what they sell. That is a classic 1-2 punch for growth. Now, where does all that money land? Gross profit margin, which is basically how much money they make after paying for the ingredients and making the product, saw a slight dip. It was 38.5% in 2024 and came down to 37.9% in 2025. The company mentions increased commodity costs and tariffs as the main culprits. Think of it like this. The spices and ingredients they buy are getting more expensive, and that eats into their profit before they even sell the final product. On the flip side, they're selling general and administrative costs, which cover things like marketing, salaries, and office expenses, actually went down as a percentage of sales. They dropped from 22.6% in 2024 to 21.9% in 2025. That is good news. It means they're becoming more efficient with their overhead C. Spending or getting more sales bang for their buck. They attribute this to cost savings initiatives and lower performance related bonuses. But here is where it gets a little fuzzy. They reported special charges of $21.1 million in 2025, up from $9.5 million in 2024. These are costs tied to things like restructuring and integrating new businesses. The company says these actions are to simplify processes and improve competitiveness. While it is good they're trying to streamline, these charges can mask the underlying operational performance, so it's always important to look at their adjusted numbers too. When you strip out those special charges, their adjusted operating income margin actually improved slightly, moving from 15.9% in 2024 to 16% in 2025. This adjusted view suggests that their core business is getting a tiny bit more profitable, even with those higher ingredient costs. Consistency is key here, and it seems McCormick is keeping its core operations humming. Let's break down their two main businesses, consumer and flavor solutions. The consumer segment, which is what you and I probably buy in the grocery store, saw sales grow by 2.6% to almost $4 billion. They mention growth across all regions, which is a positive sign of broad market appeal. The flavor solutions segment, which supplies ingredients to food manufacturers and restaurants, had a more modest sales increase of 0.5%, reaching just under $2.9 billion. While pricing actions helped, they saw a slight dip in volume and product mix, especially in the Americas and Europe. This indicates some headwinds in business too. Busyness sales, perhaps due to economic pressures on their clients. Looking ahead to 2026, McCormick is projecting quite a jump in net sales, between 13 and 17% growth. A big chunk of that, 11 to 13%, is expected from their recent acquisition of a larger stake in McCormick de Mexico. This deal, which closed in January 2026, is clearly seen as a major growth driver, expanding their reach in Mexico and Latin America. If those integration and growth plans pan out, this could be a game changer. Now, no corporate report is complete without a serious look at the risks. McCormick is pretty upfront about the challenges. They're worried about global economic downturns, inflation, and how changes in trade policies like tariffs could impact them. These aren't small risks, as they directly affect customer spending and the cost of their raw materials. They also highlight the risk of supply chain disruptions, whether from natural disasters, pandemics, or geopolitical tensions. Given how interconnected global supply chains are, this is a constant concern for any multinational company. A single event could disrupt production or delivery, impacting their ability to meet demand. On the shareholder front, McCormick has a consistent history of paying and increasing dividends, which is often a sign of financial stability and confidence from management. They've increased their quarterly dividend annually for the past 40 years. In November 2025, they approved another increase, which typically signals to investors that the company expects continued profitability. Here is a nod to their accounting practices when it comes to indefinite, lived intangible assets like brand names and trademarks, which are worth billions of dollars. The auditors identified the valuation of these assets as a critical audit matter. This means it involved particularly complex judgments and estimations from management about future performance. While the company believes these assets are not impaired, the sheer value means any future write-downs could hit their bottom line. Overall, McCormick seems to be navigating a complex economic landscape with a steady hand. They're growing both organically and through strategic acquisitions like the increased stake in McCormick de Mexico, which they clearly see as a significant growth lever for the future. Their consumer business remains strong, and they are actively managing costs and pricing to counter inflationary pressures. However, the risks they highlight, particularly around global economic conditions, supply chain vulnerabilities, and currency fluctuations, are very real and could impact future performance. The success of their integration plans for McCormick de Mexico will be crucial. Investors will be watching closely to see if they can maintain their growth trajectory while managing these external pressures. So, what is the verdict? McCormick is a seasoned player, demonstrating resilience and a strategic focus on growth, particularly through acquisitions. They are not immune to global economic uncertainties, but their brand strength and diversified business model provide a solid foundation. Alright, that is our breakdown of McCormick & Company's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, see you next time.